All right, everybody, welcome to Brighter. So this morning, Tesla just announced they delivered 435,000 vehicles, which is a significant decline in volumes, but it was caused by planned downtimes for factory upgrades. So while this was a major miss as compared to the investment analyst consensus of 454,000, the most important statement Tesla made was they're still targeting around 1.8 million vehicles for the year. So will this word around instead of saying over 1.8 million, is that going to make a difference? We have Jeff Lutz with us today, and he has some very unique comments to make about that. Plus, we're going to show you stats on the deliveries over the years and what we expect to happen in Q4. Welcome, Jeff. Thank you for joining.
Great to be with you, Robert.
All right, so Jeff, as many of you know, he's a C-level supply chain executive, previously a chief quality officer. He's worked at Lenovo, Google, and Motorola, and today he's running his own consulting firm. So this morning, it just dropped, as we have been all waiting for, pins and needles. What happened to the third quarter of 2023? Now, while this is important information, we all, long-term investors, know that this is really not going to make a difference over time. But you can see here that production was 430,000 and deliveries was 435,000. The most important statement that they made in their statement was this statement here: our 2023 volume target of around 1.8 million vehicles remains unchanged. So that's good news, right? It still is very much targeting 1.8 million. We'll talk about that word around instead of above or over 1.8 million. Here's the breakdown. If you can see the Model S and X, it's 13.6 production, 15.9 deliveries. And then the Model 3 and Y is 1419 deliveries. That's how they came up with the 4335. We'll compare that to the Q2 numbers and what's happening there. And then just before I get Jeff to give us comments here, let's take a look at how that number, 435 deliveries, compares to the 454,000, which the analysts were expecting. Here's all the analysts here. They had, did it a consensus, and this is where they came up with. Jeff, what's your thinking about what happened this morning?
Yeah, I mean, I thought the production delivery numbers were fine, especially given the downtime that several of the factories had to go through. Again, they're either retooling for upgrades so they can actually build product faster in the coming quarter, or they were retooling for a new product like the Model 3 Plus, for example, which we'll talk about. So there are a lot of dynamics in there. It wasn't just take the factory down and bring it up. It's also building the stock, something that a term in the industry, pre-building or building the stock of a new product right on the edge of a quarter. And when you can't deliver all of that product in the quarter, that that converts into inventory, but then it evens out over time. It'll all flush through in the next quarter. So I actually think they're set up very well for the next quarter, and we can talk through some of those dynamics in a bit. The other thing on the analysts, not all the analysts reduced. That's why if you saw the median, half of them were above that number, and then part of them, or half of them, were below, and they just didn't reduce their estimates, given the factory downtime. And even though Tesla said, like, we're going to deliver less cars than the prior quarter, so you had analysts in there with estimates that were still basically at or above the prior quarter. And so that's where you have that. But whatever, it's a miss on both the production and the delivery side. But I do think they're set up well for the following quarter.
If when we take a look at estimates of who's creating these estimates, this is what we see here from the retail investors, some of the folks that are more financially and oriented analysts, retail analyst versus the investor analyst. So 435 was the number, and James Stevenson pretty well hit it dead on. But the rest of the other folks was much higher, as you can see here, even going up to 451. But they are all lower than the investor relations consensus 454.
Exactly.
What was happening here? Why did people think it was going to be a lot higher than it actually turned out to be?
Like I said, I don't think they adjusted their numbers given the downtime, and I actually believe that those list of people on there are much closer to Tesla in the action versus some of these analysts are covering many different names. So yeah, I mean, if you look at the numbers there, I think Troy was at 441. He's basically within, 1.5% of the number. That's great. I think the accuracy of the people that follow Tesla very closely and actually do the tracking and do some of the work, was actually surprisingly pretty spot on. I do think this moves around a lot. I mean, if you look at those same names from the prior quarter, some of the names were wildly off. Some of them were much closer. So I think this just moves around quarter to quarter, quite frankly. But if just that distribution of names, they were only within a couple percent of the actual number, I think that's pretty good given all the variables.
Hey there. Thank you for joining me. If you can, please consider supporting this channel. It's a lot of work arranging all of these amazing interviews. I've created a website that is the most comprehensive resource for the Tesla investor. It has over 15 modules to keep you informed. And you can get for free 3 milestone tables that list every major milestone Tesla has ever had since 2003. Please check it out. Simply go to my website at herbertong.com. Thank you very much, and let's get brighter. All right, so this let's take a look at this chart from AJ. He created something quite nice that we can compare everything, put everything in context. So as we'll see, the third quarter deliveries was about a 6.7% drop from the second quarter over quarter. But here's some of the context. So first of all, if we take a look at this chart, this is the trailing 12 months, that red orange line here. And it's skyrocketing, right? From the first quarter of 2018 and every quarter until now, it is skyrocketing. That to me is an exponential curve. It's going up quite nicely. What's your thoughts about this?
Yeah, I mean, it shows you they're basically at, the 1.8 run rate. They're already there. If you look at on a trailing 12, that's why I think the around the 1.8 for the year, I don't think is going to be much of an issue. So yeah, the growth is there when you compare to prior quarters. And remember, Tesla is changing the way that they're doing business too. They could have easily probably hustled another 5,000 to 10,000 units out at the end of the quarter and paid a bunch of tremendous expedite fees on logistics to do that. But they're not doing that. They're trying to end that delivery wave and have more level loaded deliveries throughout each quarter, and we're seeing that in the data. So I think Tesla properly guided in terms of what was going to happen in this quarter. Again, I think these things are difficult to call. When you're going to take a factory down, when you're going to bring it up, how quickly is it going to come up? Are all your suppliers going to execute? Is everything going to work perfectly? I think it's just a little bit difficult to call, but that trailing 12-month view just shows you that they're basically on that trajectory for the 1.8 already, and they're going to come out of these upgrades with greater capacity and the ability to probably build product faster, better, cheaper. So I think they're set up well for Q4. And just getting into the inventory side of it for a bit, I know the numbers just came out and there hasn't been a tremendous amount of analysis, but one of the things I've been seeing on Twitter is like, oh, look, there's only a 5K or so drawdown in inventory. With the factory downtime, I was expecting a lot more. I think that's a lot of the Tesla Q people are posting that too. And, I think it'll take none of us actually really know exactly what's going on, but if you can just look at a couple of variables, you can see what's probably happening. And I think when Tesla has their earnings release, we'll learn more. But one is if for inventory, you really have to understand, point one is you have to understand the composition of inventory. So what's in it? Is it the same, threes and Ys, or did you have a new product that you were pre-building in that quarter? The answer is we had a new product we were pre-building in the quarter for both, China, Asia, and Europe. And that was the Model 3 Plus. I don't believe there's been any deliveries of the product yet. So you built them and you put them on ships, you built them and you have them in inventory staging going to other countries in Asia, or you have them in China ready for delivery. So we don't know why there hasn't been, the deliveries haven't started. There could be a technical issue they're working through. There could be just a certification issue they're working through. Or in the case of Europe, you just have product in transit, awaiting arrival and potentially a local approvals there as well. But you have to put the Model 3 Plus on a number. when I say put it on a number, you have to put like how many were pre-built in the quarter. Is it 30,000? Is it 40 to 50,000? I think it's somewhere in that range between Asia and then the 3 or 4 boats we saw going to Europe and Australia that would have Model 3 Plus on them. So that's one piece of it. The other piece of it is just understanding. The second piece is just what is static inventory versus turned inventory. Some people think like, Tesla had 89,000 cars in Q2, and then they had 95, pick the number, whatever number, in the 80 to 100K range of cars in inventory. That's not the same cars that are sitting in inventory. They're getting shipped, put into available to for sale, and then they're turned. So this inventory is turning over quarter on quarter. It's not the same VIN numbers from many, many months ago. So this inventory is moving and turning. And that's the key metric that's important as a company is are you building product and is it moving and shipping out the door? And are you getting revenue on it? Third is understanding the dynamics of a 90-day shipment quarter, the 90 days of shipment, and then the 75 or so days of production that's available to ship in a quarter. And that piece of it is understanding what's in inventory that's in transit and what's in inventory that's available for actual sale. And I believe what we're going to find, and Tesla indicated this in the Deutsche Bank note a couple of weeks ago, is they had about half of the inventory coming out of Q2 was in transit, meaning it wasn't available for sale, or it had an order, tied to it for an end customer, but didn't receive it in time for the end of the quarter. That's a really important number to understand. It's not like there's just 88 or 100,000 cars sitting around that would be sold if there's demand, but there isn't demand. It's these cars are in movement going from the factory to a destination. When they're in movement, they can't be sold or transacted on. So I think the third piece is understanding what's available to sell and what's in transit. And then when you really break down this inventory, going through the 3 points again, is one, you had a new product ramp up. Was it 30 to 50,000 units pre-built in the quarter of the Model 3 Plus? Whatever the number you think it is, just put it on a number and then put that as, okay, if they have 90 or 95,000 cars in inventory, whatever you think the number is, and then 30 to 50K of it could be this pre-built Model 3 Plus, that could be a third to a half of the days of inventory assigned to that. And then the second piece is understanding static versus turned inventory. And the third piece is understanding what's available to sell and what's in transit. And so Tesla, and then I think the overarching thing to put over on top of the whole thing is Tesla doesn't have an inventory problem. Not at all. In fact, I would say they're mostly undersupplied, and they've got some of the best days of inventory in the industry. Remember, you're comparing them to the industry that uses a dealer network versus non-dealer network. So they actually have more working inventory, more working capital than Tesla does, because they have stuff in their factories that you don't see in the dealer inventory. So the overarching theme in this whole thing is Tesla doesn't have an inventory problem. But I just wanted to go through those points after this Q3 P&D report.
Good. Thank you, Jeff. That was very, very well done. Let's stick to the third quarter of 2023. And then after we talk about this, we're going to talk about Q4 and what we expect for the year. So we take a look at this a little bit more specifically. We already know that deliveries was 435,000 vehicles, but that was 6.7% less than what happened in the second quarter. And here you can see the breakdown between the 3 and Y, 419 versus 447. But here in S and X, it was about 3,000 less than it was in the second quarter of last year. So Jeff, can you explain a little bit the breakdown of the trims here?
Yeah, I think so. Just starting with the S and X, I mean, the first off, this is 4% of the volume that Tesla ships in a quarter. So I think it's relatively insignificant to them. It's insignificant to the quarter. But when you look at you have to look at the anatomy of like when these price changes actually go into effect. And I believe that the price change on X and X was either the last day or so of August or the first day coming out of Labor Day in September. So it's very late in the quarter. Many people that don't live literally next to the Fremont factory where S and X are made, most likely if you put an order in when you saw the price cut, you weren't going to take physical delivery of it in the quarter, just given the logistics times, roughly of 10 to 14 days or longer in the continental United States, from the time they actually did the price cut, and then for them to actually build and ship out new vehicles. What we did see was a big drawdown in inventory on SNX with the price cuts, which is good. But I think a lot of those people that saw the price cuts, put a new order in, are going to be taking delivery most likely in October. So that explains that. And then on the 3 and Y, I mean, I think Tesla told us that there would be a reduction in production from the prior quarter. The Model 3, again, they had to slow down. This is like a plane that's basically in flight, and you're changing the landing gear on the plane while it's in flight. So the 3 was in flight, basically producing a third of Tesla's shipment volume, the Model 3, and then you take that down, at least in China and Europe and basically non-North America, and you change that model over. And when you do that, and then in the course of that transition, you're building up the new Model 3 Plus, and that's been produced but not available to ship. So in the quarter, so that I think that explains some of that and what happened. And again, the other thing I wanted to just mention again from the prior discussion, inventory, the factories were taken down at various stages in the quarter, but none of them were taken down in the last 1 to 2 weeks of the quarter. They were all taken down at some point prior to the last 1 to 2 weeks in the quarter. And why do I bring that up? So in the case of Austin, for example, I believe that factory just returned somewhere in the range of the last 10 days of the quarter. That factory returned. So what are they going to do? They're going to spool up and start production, and there's already vehicles that were available in the delivery lot, but those wouldn't make it out in time to get to a customer in the quarter. So now you have available production window in the quarter where you're building, but you can't actually take credit for the units actually delivering. So the devil's really in the details when you actually look at when the shutdown occurs relative to the quarter versus the number of available production days where you can build a unit and ship it in the quarter.
Yeah. Actually, when I look at these numbers, it doesn't actually look that bad, really, when you think about it. Look at the deliveries. It's only 7% less than it was in Q2. And the production is only 10% less in Q2. And so we're all thinking it's a major miss. But actually, when you look at percentage-wise, instead of thousands of vehicles, it's not terrible that it was only 10% reduction in production when they had real reasons why they had downtime.
And again,
any comments on that?
This isn't Tesla's expectations. These are analysts. These are people that are outside of the company guessing the number, and then that number is put into an average, and then that number is put on TV. What Tesla said is we're going to grow 50% CAGR from the 2020 number. We may have that chart in here later. That's what Tesla's commitment is, and they're still on track for that. And their other commitment is around 1.8 for the year.
And they're still on track of that. We'll share that chart that you just said. It's going to be that's a cool chart. So this one is just another way to look at things, because we do know that there's seasonality between the quarters. So let's take a look at Q3 car deliveries over time from 2012. These are all Q3 numbers to 2023. So obviously the numbers just skyrocket up. We're now at 435,000 in about 10 years. I didn't understand this. I don't know if you saw it. Annual growth rate is 92%. I mean, I guess if you're comparing it over the 10 years, is that what this is? I don't know what this is. How did you get what?
Yeah, I don't know what I think they're doing it over the whole time span. But the point is actually just look at the relative growth just from the last 3 to 4 years, and it's significant. And I think now what Tesla's doing with new models and entering new categories and taking their cost structure down as well, I think they're going to come on the other side of this when interest rates actually settle down. They're going to be in a much better position, much higher volume operation, a much lower cost operation with more models, more model types and segments available to serve.
Okay. All right. So then let's take a look at what's going to happen in Q4. So this is a great roundup. Tesla, as of the end of Q3 2023, there's now delivered a total of 1.3 million cars. right? So this already surpassed the 2022 total of 1.3 million cars. So just that's awesome. Like we're already 3/4 of the way there. We're already what we hit 2022. So they did reiterate that they're gonna hit around 1.8 million delivery target for this year. So they expect 476,000 cars in Q4. That would be a new quarterly record. And then Gene Munster said that to hit the 1.8, they would need to deliver 476,000 in December, which would be up 17.5% year to year. I believe they will slightly exceed that number. What's your thinking about their chances of hitting the 1.8 million? Why did they say around? Just thinking about where they're at today.
Yeah, I think a couple of things. One is you never know what could happen. A supplier, remember, a lot of there's suppliers that Tesla uses that are also used by UAW, Ford, GM, and Stellantis, and some of these suppliers are in trouble, especially second and third tier suppliers. I mean, that would be an interesting question for Tesla on the earnings call. Or do you have any suppliers that are commingled related to this strike that are in financial trouble that you have to do some assistance to or some help to, or is there any impact to Tesla supplier delivery in the quarter? So I think there's just unknowns. The other thing is the marginal rate of lending. It continues to go up, even though the Fed paused in September. You're seeing the 5 and 10 year rates go up, which are in that range of where car loans are. And you're seeing those rates, the 10 year this morning hit 4.7. I think that's a multi-decade, certainly a recent high and a multi-decade record. So when you have all these different variables coming together, and then you have the IRA going to point of sale credit, you're going to go to sleep on December 31st. You're going to wake up January 1st, and you're going to be able to drive a Tesla off the lot, 15% or more cheaper, a 3 or Y, and I guess some of the X's. And I think, that's a factor as well for some people. Some people don't want to wait till their tax return. And obviously the other thing is not only waiting your tax return, it lowers your monthly car payment from month one. So I think there's a number of factors for them to deal with. And that's probably why they're like, okay, it's going to be about that number. And the other thing is Tesla's reiterated this, they're not doing these massive expedites at the end of a quarter anymore to get to make a number or to ship cars. They're trying to level out the quarter. So when you put all those variables together and you've got a new product ramping with Cybertruck, that's why they're probably like, it's going to be about this number. I think if it's, very close to that number within, whatever, I think it's fine. If it comes in, meaningfully lower, if they're 50,000 or 100,000 off, I think we're having a different conversation. But these things, like I wish, like for example, this quarter 435 versus 440 or 5,000 cars, 10,000 cars. This is not meaningful when you look at the trajectory of the company and what their CAGR growth has been and where they're going.
Okay, let's take a look at that now. This is a wonderful chart. Thank you for sharing this with me. I love it. It's a great ending for this show here. So if you take a look at the kind of the growth of production deliveries for Tesla over the quarters from 2020 to today, 2023, the blue line is the production and the red is the deliveries. And so you can see that deliveries kind of like outpaced production in the last Q2 and Q3 here. And of course, we know why they did that, because they had plant shutdowns. But the green line is awesome because that is the compound annual growth rate. So if you just look at the guidance that they gave in 2022, 2020, that said, that said, CAGR should be at 50%. Not every year it's going to be 50%, but over time it will be at 50% growth. And it looks like we're actually still at 50% growth. And so I don't know why people keep warning that we're not going to hit it. They keep always warning, but we have been hitting it. What's your thoughts on this, John?
Yeah. And Tesla said, look, this is our target. And I believe when they're doing capacity planning and they're looking at all the different variables that are going on, I believe that they want to stay as true to this as possible. And whether it's in pricing, whether it's in cost reductions they have to do internally, whether it's, accelerating the pace of production in factories, whatever they need to do, they're trying to stay on this rate of growth. And this also impacts their portfolio and their product line and which categories and segments that they're serving. So I do believe that they're adhering to this. And they said, some quarters or years they'll be slightly below it, some they'll be above it, but generally they're going to stay on that line. And I think that's great. It's kind of a North Star if you're a multi-year, long-term investor. This is the company, and this is the growth trajectory they're on. And just be careful on Twitter. Like don't let, there's going to be all types of people like, oh, it was only this growth here. They're going to microanalyze a quarter here or there, but you have to zoom out. You have to step back and zoom out and look at the growth of the company, and that's going to convert to dollars. Again, some quarters, some periods of time, they're going to be crunched on margins because they're trying to make sure they can clear all the inventory and keep their factories and suppliers running, at full utilization. But they're making the decisions around that North Star of driving that 50% CAGR growth or greater.
Okay, thank you so much, Jeff. Appreciate this. Glad to get your opinion on all this. So you've already been saying, as many of us have, which is what most important is, did it change the outlook for the end of the year? And it has not. It still is the 1.8. This is all planned. We understand why this has happened, but you gave all the nuances of inventory, deliveries, and the trims. Thank you, Jeff. Appreciate your background there.